We're looking now at the currency market with Nomvuyo Guma, Macroeconomic Strategist at Standard Bank. Nomvuyo, a very good morning. The picture that we're seeing on the equities front suggests that risk is back on and we're seeing equities bouncing up. Are we seeing a similar movement on the rand after yesterday's lows?
Morning, Godfrey. No, we're certainly not. I mean, the rand has recouped some of its losses from yesterday, but the attitude or prevailing sentiment as far as currency markets are concerned is very much still risk off. Investors still fleeing into safe haven assets, liquidating largely their emerging market positions. And of course, when it comes to a currency like the rand, which is quite liquid, there are no curbs on foreign investors either entering or exiting the market. So we're seeing the rand really bearing the brunt of what seems to be a general rise in risk aversion this week.
Absolutely. And we're looking at that currency now almost flat on the day, 0.2%, slightly stronger against the US dollar. But when we look at the developments in Europe and in the US, there does not seem to be much in terms of factors that would likely drive further currency strength. Where do you see the currency trading for the rest of the day today?
Yeah, well, you're absolutely right that the rand is probably going to take its direction or continue to take its direction from events that we see panning out in Europe. We know Greece is back in the spotlight and investors, and it seems like German officials also bracing themselves for potential default from Greece, and that's been one of the main reasons why markets seem to be so risk averse. So as long as that situation continues, or if it even deteriorates further from these levels, of course we would expect the rand to weaken even further. So from current levels we could see it move as far as 7.49, perhaps even past the 7.50 mark, depending on how bad things get this week.
And of course things could get worse because today we're expecting numbers coming out of the central bank from their quarterly bulletin. What are your expectations for that current account, and what number do you think will likely move the rand?
Well, certainly as far as what will move the rand, the current account is going to be one of the key figures there. We already know what GDP did in the second quarter, and we know it was quite a pronounced slowdown. So it really is going to be that current account deficit or hopefully a surplus, but most likely we're expecting a deficit. We're expecting it to have widened slightly. First quarter deficit was 3.1% of GDP. We're expecting that to have widened slightly to 3.2% of GDP. But of course that is a measure of external vulnerability. So should that come in much worse than expected, i.e. higher than the number that we've penciled in, that could certainly undermine the rand's strength or its ability to stay strong at this point from a GDP differential basis, and also just from a fundamental valuation perspective. So that certainly is going to be the key driver of the rand for what we see happening today.
Yeah, the rand's friends are few these days, certainly, because now last week for the first time we began to see foreign investors selling South African bonds, which have been probably one of the biggest factors behind the rand's strength. What numbers are you seeing in terms of foreign interest in South African bonds, and what impact do you see that having going forward?
Well, yes, Godfrey, that was quite a recent development. We saw bond inflows actually continue for most of August, and that was despite the fact that markets were also quite volatile in August. But now, as you mentioned, it seems like foreigners are starting to pull out of the bond market, and in quite substantial numbers. We think this is related to the fact that as things deteriorate in Europe, there's the growing concern that the current crisis could morph into being a liquidity crisis. As I mentioned, it does seem that investors are bracing themselves for a potential Greek default. And so it does look like they're liquidating particularly emerging market conditions, emerging market positions. And of course, with the rand being one of the most actively traded currencies and one that you can get out of relatively quickly, does look like the currency is starting to suffer on the back of those quite sustained bond outflows. So of course, all eyes on Europe for this week as far as the rand direction is concerned, because should things get significantly worse there, then we could see these bond outflows intensify, and that would also help to weaken the rand.
Which may also be affected by the numbers that we saw yesterday. What was your reading of the consumer confidence numbers that came out yesterday? The consumer does not appear to be in a very good space at the moment.
No, not at all. I mean, the numbers were undoubtedly bleak, quite poor. We had expected consumer confidence would come down in the third quarter, and we saw quite a sharp fall in the business confidence numbers that were released last week. So it did still come as a bit of a shock, however. The extent of the decline now at a 2-year low, so that means that consumers are about as pessimistic as they were during the recession, and particularly with regard to the economic situation over the next 12 months and with regard to their own finances. indicators. So certainly we're not surprised that consumer confidence fell, but the extent of the decline does raise some questions about how sustainable consumer spending is going to be at these levels. We saw quite sharp pullbacks in retail sales in May and June. We're still waiting on the July numbers, but it doesn't look promising at this stage, and does look like, as far as consumers are concerned, they are running out of steam. Of course, we are going to get consumer spending numbers in the quarterly bulletin today, and that should give us a better idea of really what consumer spending has been doing recently.